5 Money Secrets Banks. Hope you never understand. Imagine waking up tomorrow morning. You check your bank account. The balance hasn't changed. Not a single dollar is missing. Yet somehow you're poorer than you were yesterday. It sounds impossible. After all, banks have spent decades convincing us that saving money is the safest financial decision anyone can make. Parents teach it, schools repeat it, financial commercials celebrate it. Work hard, save your money, keep it safe in the bank. But what if that advice only tells half the story? What if the very place you trust to protect your money is quietly allowing inflation to chip away at your wealth every single day? Today's story isn't about conspiracy theories, it's about understanding how money actually works, because once you see the system differently, you may never look at your savings account the same way again. Chapter 1. The Illusion of Safety. Meet Michael Carter, a 34-year-old software engineer living in Austin, Texas. Michael did everything society told him to do. He graduated college, found a stable career, avoided unnecessary debt, and every month he transferred part of his paycheck into his savings account. By the age of 34, Michael had saved over $80,000. Friends admired his discipline. Family called him financially responsible. Even Michael believed he was winning. Then one afternoon, while buying groceries, something caught his attention. The same cart of food that used to cost around $120 now cost nearly $170. Gas prices had climbed, insurance premiums had increased, rent across the city had exploded. Even a simple dinner at a neighborhood restaurant cost far more than it had just a few years earlier. At first, Michael blamed expensive stores, then he blamed the economy. But eventually, he asked himself one simple question. If my savings keep growing, why does everything around me keep feeling more expensive? The answer wasn't sitting inside his bank account. It was hidden inside something most people rarely think about: inflation. Chapter 2. The Silent Thief. Inflation doesn't steal your money, it steals what your money can buy. Imagine you leave $10,000 sitting inside a savings account, earning around 3% per year. Sounds reasonable, but imagine inflation averages 4%. On paper, your bank balance grows. In reality, your purchasing power shrinks. Your dollars become slightly weaker every year. The number on your screen looks bigger. But the lifestyle those dollars can afford becomes smaller. It's like trying to walk up a downward moving escalator. You're moving forward, but the system is moving backward even faster. That's why many wealthy investors don't judge success by how many dollars they own. They measure success by how many assets they own. Assets that have the potential to grow faster than inflation. Businesses, real estate, index funds, dividend-paying companies. Because while cash slowly loses purchasing power, productive assets have historically had the potential to grow over long periods, although they also come with risk. Money sitting still often works the hardest, for everyone except the person who owns it. Ending hook, Michael thought keeping cash in the bank was the safest financial move he could make. He had no idea. The real game wasn't about saving money, it was about making money work. But what he discovered next shocked him even more. Because the bank wasn't simply storing his money, it was using it. And once Michael learned what banks actually do with customer deposits, he realized the financial system was far more complicated than he had ever imagined. In part 2, You'll discover why your deposit may be helping create new loans throughout the banking system, how modern banking works, and why wealthy borrowers often qualify for dramatically lower interest rates than everyone else. Fade to Black. To be continued.